Mastermind. Perfect. Thank you, Donald.
All right, you're good to go.
This is being. Hi, everybody. My name is Heather Brooks, and I have with me some of our board members. We have Donald Maycott with us. Happy birthday, Donald, by the way.
Thank you.
You're welcome. And Debbie Gentry, who's going to be presenting Heckum loans. For anybody that's just joining us that hasn't been following us, we do weekly masterminds every Tuesday for the senior market. We hit everything from the 55 plus. Today, we're going to be working primarily with dealing with Heckum and learning more about them. Debbie Gentry is here to present for us, I should say. And I'm going to let her take it away because she has been in this market for just a few years. Right, Debbie?
Just a few.
So, Debbie, I'm going to let you take it away and tell everybody a little bit about yourself.
So I've been in the 55 plus arena for probably close to 20 years. I was in Orlando and did it for about 5 years, not full time, but I moved to the Villages, Florida, and I've been doing it since 2006, exclusively in the Villages. So working with the 55 plus community is my passion, and it's a great niche that's very underserved. So the thing I wanted to bring to the table tonight is really understanding how to use the Heckum home equity conversion mortgage when you're working with buyers. And when we're going through this, if you have questions, Heather, if they're in the chat, can you share them with me if they're kind of related? Otherwise, we'll catch them at the end. How's that?
Sounds great. As a matter of fact, for anybody that's joined us, the last 15 minutes, we do a question and answer live. So you can pop on then if you want to save the questions. It kind of helps so we can get through it in enough time.
So a Heckum loan, is really if you have somebody that's 62 years old or older and they want to buy a home, how many times do they tell you what they desire? And then you find out what they really want to buy with cash is really not what they want. The disclaimer here is we're not going to discuss a reverse mortgage after the purchase. This is strictly for doing Heckum loans when we're doing the mortgage, because we don't get paid off of doing a reverse mortgage after the purchase. I'm not a licensed mortgage person, so I'm not trying to sell Heckum loans. I'm helping you to understand how to use them with your 62-year-old or older buyers. So questions, how much does an average 62-year-old buyer want to spend as an average monthly payment without taxes and insurance? Throw it out there. Anybody? Or what's your average monthly mortgage payment in your area?
I'm waiting for people to put it in the chat box.
Or open their mic. I don't care.
Donald says 1,200.
I'd say under 1,000.
Anybody else?
Roger's 1,500. Kimberly says 1,000. Simone says 1,500.
Sounds great. So we'll keep that number in mind. So what interest rate are we getting on our long-term investments on average each year? It could be your own investments or what you've heard other people are making. What kind of interest rate are we getting?
10%, Donald says.
Anybody else?
From a bank? Where do you get 10%?
I didn't say bank. I just said investments, whatever investments mean to you.
Interest rate. So 10% is pretty good, Donald. You better keep in that one. Don't spend that money.
Not spending it. It's invested.
Right. That's why I say keep it.
So What else? Donald said 10. So if it's not 10, what is it, Roger? What is it in your area?
I'm sorry, I was just thinking interest rate. That's why I put 0.00001 on your savings and stuff like that. So I wasn't thinking investments. I was asleep at the helm.
Yeah, I'm talking stock market, 401, pension, whatever you've got invested
5
where.
to 7.
Say what?
5 to 7.
5
Some-
to 7. Okay. Anybody else?
I'll go with Roger on that.
Okay. Well, overall, and it does depend on where you're at. And when we talk about the HECM loans, I'm talking about HECM loans strictly for the United States. Canada does have a similar program. So I don't know anything about it. So you'll have to do your own investigation if you're from the Canada world. Average mortgage payments can be anywhere from from 800 to 1,300 without mortgage insurance, without insurances and taxes added into it. Look at that. Wow, you guys are smart. Investment rate, 7% to 10%. So we're right on. Now, keep that in mind while we're talking about this. What could you do with another 800 or 1,300 in your pocket if you were the buyer? Oop, my thing jumped.
Invest it with Donald.
Exactly. So the scenario I'm going to use tonight, because everybody's average price is different. And this is not for my area at this point, because we're definitely higher than this. But I wanted to kind of use something that we can all relate to. So if you have a married couple and they want to buy a house, they're going to use it as a primary residence, whatever that means in your area. In Florida, that means they're going to homestead it. They want to pay $200,000 for a single family home. And the husband's 64 years old and the wife 62 years old. How can they buy this home? Name all the ways they can buy it.
Cash.
Cash is good. How else can they buy it?
I see mortgage, finance, Heckum.
What kind of mortgage?
Lease to own. What kind of mortgage, Roger? Forward. Somebody said forward. VA. FHA.
Yeah. All those choices. USDA.
Conventional.
About USDA in other parts. My area, we don't do USDA, but sure, they could do it. So some of the ways they could buy is cash, conventional, FHA, VA, USDA, possibly, maybe a 1031 if they can wait a couple of years. A Heckum for purchase. Those are some ways that they could buy this house. What's the best approach? Depends on what they want. So this same 62-year-old buyer that wants to pay $200,000 in cash, you start discussing their needs and desires. Have you ever discovered they really want that $300,000 home? Because there's no way they're going to get everything they discussed for 200. And when you start discussing it, no, those we have to have. So now it's time to explain what a Heckum for purchase loan is to the buyers. Our job is only to get them interested enough so we can get them to the Heckum specialists so they can explain the nitty-gritty details. Do not try to explain the Heckum, just know enough to get their interest, get them over to a Heckum mortgage specialist. What is a Heckum loan? It's available to buyers 62 years of age and over to help them purchase a new home with approximately 35 to 55% down payment, depending on their age, plus the closing cost And then they make no monthly mortgage payments, as we call them, optional payments, for as long as they live in that home as a primary residence. Other definitions will say people are familiar with the reverse mortgage, but they don't know what a HECM is. It's actually insured by the Federal Housing Administration and follows the rules and regulations set up by the Department of Housing and Urban Development. So what's that mean? It's pretty much like you would have with the VA or FHA type loans. That's who's regulating this. A HECM loan, you still have to pay the property taxes, homeowners insurance, upkeep of the home, and any required fees. So HOA, in our case, amenities fee, etc. You cannot let the house deteriorate, and you still have to pay those fees. How do I explain it? I pretty much let them get to the point where they've told me everything they want to tell me about what they're looking for. And I'm pretty straightforward to everything. I say, well, it sounds like everything you like in a home is over the price range you desire. Do you want to add more cash or do a mortgage to do the purchase so you can buy that higher price? And the immediate response is no. They want that 200, but they want that $300,000 house. Then I ask him, can I explain another potential option for them? So if I could show you how you could buy the $300,000 home by using approximately 52%, $155,000 of your $200K cash that you told me you have, and you'd have an optional mortgage payment, and then you'd have $45,000 to give to Donald to put into his investments, would you be interested in hearing more? And here's kind of a chart, and I will make this presentation available in the EXP Seniors Network group. But this is a quick chart to show you how that works. But we're talking about somebody that's wanting to buy $300,000. The one is 62 years old, the other 64 years old. We're going to average it, and it's going to be somewhere in the middle of this. And so they're going to come to the table with about $153,000, $152,000. Everybody understand that chart? Does that make sense? If they're 70 years old, then they're going to come with a lot less down. So this is how much down they have to come with for this price range. And I have rounded these numbers on the chart. That way I didn't have all the pennies that they have showing on the chart. So who should consider a HECM for purchase loan? I will tell you the first person that came with one was a typical buyer out of Boston. She gave me a pre-approval and the word HECM for purchase was on there. And I had no clue what she was talking about. I had no clue what the mortgage lady was talking about. This was 2010. So I just said, thank you for the pre-approval. I called the mortgage lady and asked her what the heck's a HECM for purchase. I'm sure I didn't say HECM. I probably said something else. And she explained it to me. That's how I learned. But who should actually consider a HECM for purchase? A married couple, 62 or older. A single person, 62 or older. Someone who's getting a divorce. So you get a divorce and now you've got one income. Someone who's lost a spouse / income. Folks with a lower monthly income. Folks that want to keep another house, not as their primary, but as their secondary home. So they don't want to sell, but they have the cash to come up with that down payment. Or the very last one is everybody should be wanting a HECM because there's a lot of financial ways to save on your taxes and save a whole lot of other ways by being a financial savvy buyer who understands investments. And that's way beyond the scope of what I do. And it's way beyond the scope of what we'll discuss tonight. But if you get a Heckum person that really knows what they're doing, and you get a financial person that wants to buy a house, they will eat it up and will love the Heckum program. So my second Heckum that I did was for a lady that was getting a divorce, and they owned a house here. He didn't want anything from the house. He gave her all the debt and said, have fun. And she had it in writing that he didn't want any portion of the house because he thought there wasn't anything to be had. And the good news about it is I sold that house that they owned after she got the divorce and turned around, and she bought a bigger house to prove to him that she could do fine without him. And she used the Heckum for purchase loan. So she was very happy to find out she didn't have to move into that apartment that she thought she was going to have to move into, because she had no clue about being able to take half of her money and put it into a loan. So some of the benefits of a Heckum is you could buy more house, higher price, nicer house, whatever you want to describe it as. Because if you have 200 and you want that 300, a lot of people aren't going to give up what they want just because they don't have the money. They may go to a different place, a different location. They may decide to delay that decision till they have more money in their pocket. This is an option to keep them in your pocket, ready to go. Optional mortgage payments, you're still paying the taxes, insurance, upkeep, etc. You only have to qualify for the loan on your residual income method. That's a fancy way to say, do you have enough money to pay your taxes, insurance, and all your other debt without paying a mortgage payment? And they do look at that, but credit scores really do not come into play on this very much. Down payment can come from a lot of different sources. Things need to be 3-month season. So you can get all the money from a gift, and that's okay. Available for all types of homes, as long as it's HUD eligible. So when you're looking at condos, this is beyond my scope of, because I never have done many condos, but they have to be HUD eligible to qualify for a Heckum loan. They could be located anywhere in the United States. No resale of the homes required until all the borrowers or mortgagees are not in the property, at least primary property. It is FHA insured. This is the best thing. It's the safest loan out there. So if they buy this house for 300 and we have a major crash and now it's worth 150, they do not lose by having to pay that debt that is not going to be paid off. So it is a no recourse loan, and it is protected. And that's the nice thing about it. Hopefully we don't have to ever experience that, because we've had really good depreciation and growth, but it's a thing, it is in place. And there are no loan repayment penalties. So if you want to buy one with the Heckum and turn around and sell it whenever, you can. So what's the negatives? So the very first one is the biggest one I run into, is the general public hears Heckum for purchase. And they say, well, that sounds like a reverse mortgage. And it is a reverse mortgage, but it is a protected by FHA HUD loan. So it is totally different than if you did a reverse mortgage after you own that house. So that's the biggest hurdle that I have to get past when I'm talking to buyers and their kids, because the kids will be the first one to say, but mom, you don't want to do a reverse mortgage, because they've heard the negative. It must be your primary residence, whatever that means in your state. Most states, that's going to be 6 months, 1 day or more. one mortgagee must be 62 or older. And that's kind of different than what I said a little bit earlier, because somebody could have a spouse that is 57 and one be 62, and you could get the Heckum. I really don't say to do that, because there's some negatives that goes along with that, and you have to talk to a Heckum specialist to understand that. But your average age is going to be based off of that 57. And so your down payment's going to be a lot higher also. Negative credit payment history may eliminate your eligibility. So if you haven't figured out how you pay your bills on time, and that's getting reported as slow pay, negative pay, then that may preclude people from being able to get it. Must meet the HUD insured the standards for the property, like we discussed on the condos. That's the biggest one. I also kind of do not think manufactured homes, modular homes should be getting a Heckum loan, because those are going to depreciate in most cases than appreciate, unless it's strictly on the land. They may have 1% higher interest rate on a Heckum loan, and you can buy that interest rate down, and there's advantages for buying it down. And other people say don't buy it down. That's back to if you're financial savvy, and you start talking to the Heckum specialist, then they can present all the reasons to do it or not to do it. So the one thing that people hear is the upfront loan cost. And I've taught this to the local agents here, and this is where most of them get hung up on the Heckum loan, is there's loan costs that have to be done. And I'll tell you, it's very similar to a VA funding fee. So if you're familiar with the VA funding fee, it's very similar. 2% of this and 1% of that over a certain amount. I won't go into it because it's not our job to know that. But it's the thing I tell people, that is nothing you're coming to the table with. That is something that's being put right into the mortgage and is taken in account to your down payment that you have to do. So lately it's been taking 45 to 60 days to close a Heckum loan, unless you get them early and they start doing the process before you get out and start looking for a home. The reason is HUD has now made it that they can ask for a second appraisal if they want to. So in today's world, appraisals are taking longer than normal. And so that's why most of our Heckum specialists around here will tell you 45 to 60 days. And the final negative is most of our regular mortgage companies don't want to be bothered doing a Heckum loan because it is a different process and they have to learn a whole nother process. In Florida, they actually have to have a different certification to part of their licensing. And so most of them don't do it. So some of the myths that have been brought up in the Heckum loan side, the homeowner doesn't own the home. Same thing if you do a regular mortgage, a conventional loan. You own the home, you just have a lien on the house. Same thing on the Heckum. The homeowner can get forced out of the house. Well, if you don't pay on a conventional loan, yeah, that's true. In a Heckum, if you don't pay the taxes, the insurance, upkeep, or the required fees, yes, they can force you out. Or if you're not actually using it as a primary home, they can force you to sell the home. You have 1 year from the time that all borrowers are out of the house. And that is a 1 year period. So it's not like a fire sale that you have to sell the house quick. The other myths are the heirs won't inherit the home. Well, they inherit the home just like they would inherit the home with a conventional loan. They have to figure out a way to either sell it or somebody internally in the family turns around and pays that mortgage off in some way, or they refinance themselves. Number 4 is someone can outlive a HECM loan. That's very untrue, because you can have a HECM loan and it doesn't come due until the person is out of the house, not as their primary. So I always use the example is if a couple is in a car accident and both of them ends up in the nursing home for 5 months, they don't have to sell the house. They can go right back into the house and not have a problem, even if the one is in there 7 months, because the one is still in the house 6 months or more for the year. Number 5 is Social Security. Medicare will be affected. Doesn't get affected any more than any other thing. If you did go on Medicaid, it would be affected, just like everything else is. Who owns the house and how many people are living in the house? Medicaid is a whole different animal. And I'm pretty knowledgeable there because of my mother's situation, but it's the thing that on a regular Social Security, Medicare, nothing is affected when you have a HECM loan. The homeowner pays IRS taxes on a HECM loan. Nope, it's the same thing. If you decide to pay some interest and pay some mortgage down, you get the tax interest statement at the end of the year that shows what you've paid. Now, if you don't pay anything, you're not going to get an interest statement, but it's the thing, you don't pay IRS taxes on that HECM loan. And 7, we've talked about the large upfront out-of-pocket expenses. The only out-of-pocket expenses are the typical appraisal, and there is a consultation fee that is generally about $100, and that's just pretty much a 45-minute with a specialist that says, hey, I want you to understand this whole process, and we encourage kids or whoever the heirs are to be on the call so they understand also. So your job as a realtor is just to know enough about the HECM that you can discuss it with your buyers at a very, 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 very high level. So we don't want to get into the nitty-gritty details that I've talked about here. Let the HECM loan specialist provide all the details down to the nitty-gritty detail that they desire. So I'm moving pretty quick here. For the HUD information, I will throw, could you do that for me, Heather? Throw that link into the chat for everybody. Oh, Heather. Or Donald.
I'm typing away.
Okay. Anyways, that is the direct link. It is the federal government HUD.gov, but that is the direct site to the HECM that tells you everything you ever needed to know plus more. I tell you, if you need to sleep some night, get on that website. It'll put you to sleep pretty quick. Did you get it?
Got it. I put it in there.
All right. So this is actually on that same page. So if you just add HECM lenders at the end of what you typed before, you will have where you can find the FHA approved lenders. The interesting thing about lenders, as long as they can write in your state as a HECM lender, they may actually write in 15 states for the HECM loans. So I have HECM lenders all throughout the United States that can write in Florida, because obviously Florida, Arizona, and a few other places are kind of an accumulation of 62 plus folks. So they like to be able to actually do loans here. How do you figure out who is a good FHA HECM loan specialist? I think the best way is have them explain the loan to you. You may not catch everything that they say is good or bad or whatever, but if it sounds similar to what I've explained tonight, then they probably have a clue what they're doing. Have them run some numbers for you personally, so you can understand if you were going to buy a house for 400,000 and your age and your wife's age are this, what would they have to come to the table with? Just have them run the numbers and show you how the closing costs happen. That's a good way to figure out if they know what they're doing. My biggest is,
Quick question. Amy Roberts says, is this on the Facebook where I can get link and share with non-EXP agents? So yes, Amy, this can be shared with them. I also put in the mortgage lenders link that she was talking to in that box for everybody if they need it.
fantastic.
How do I get the Facebook? I'm sorry to interrupt. She's wanting to jump in.
That would be a Donald. Can you help Amy? A friend of hers wants to hop into our group, but she's coming through the Facebook group.
So it should be Seniors Network on Facebook, not EXP Seniors Network, but Seniors Network. And it should be going as a Facebook Live, I think.
Yeah, so if she goes to the Seniors Network in Facebook, that's the external facing. Right now it'll be out there tomorrow morning, the recording of this. Having problems this evening trying to get it to connect to that group.
Okay, gotcha.
The recording will be out there tomorrow morning.
Fantastic.
It's getting dark here.
You're gonna be sitting in the dark in New Jersey pretty soon.
Yeah.
So
The last link I put out there is actually working. The first one I put out wasn't working.
okay.
So if you use the last link that starts with HTTPS, that one will work and take you directly to the Heckum Loan website.
Okay, gotcha. So my favorite question is, where do you do your underwriting? I don't want to be in Florida and have underwriting in California. Why? Because they're running off of California time and I'm in Florida. That has been a huge problem with one of our Heckum specialists, and I have let them know that's a problem. If you're going to write loans in Florida and underwrite loans in Florida, then you should be operating on at least, Central or Eastern time. Don't be on Pacific time and doing underwriting because it causes big problems. I actually want them to be in Florida when I'm doing it. So that's a good question. Where's your underwriting? It's the same thing you should be asking on your conventional and FHA, VA mortgage folks. Where do you do your underwriting? You don't want them 3 hours away from you. Number 4 is, do they service the Heckum loan? Meaning, are they going to hold the loan or are they going to sell it off? Because it's pretty much like everything else that can be sold. Very few actually service it anymore. So they're all probably going to say, no, they don't. How long have they been at their current company? And a good question is, how many people there are Heckum specialists at that current company? If they're the one and only Lone Ranger at that company doing Heckum loans, that may not be the one for you. And how long have they personally been doing Heckum loans? Because if they just learned 6 months ago, it's like everything else. They don't have the depth of knowledge, and that may not be the right one if you're brand new to Heckum loans. But I will tell you, Heckum loans are just like regular loans. Things change every day, week, month, and year. So what you think you know today may be different. That's why I do not try to get into nitty gritty with anybody. I let them talk to the Heckum specialists to figure out what they need to know and what's happening today. So, okay, why am I not moving? There you go. So this was out on our EXP Seniors Network group. There was a link to a video, and it's from Life's Copilot group. And I want to thank them because I thought this quote was pretty good. And if you haven't watched that video, it's pretty much the video is based on reverse mortgage after purchase. It did not talk about Heckum more than 2 minutes. But this post was pretty good. There's 3 types of people: smart people that pay a reasonable interest rate, dumb people that pay too much interest, smartest people that pay interest so they can earn more interest via their investments. So back to how much are we gaining off of our investments? 7 to 10%, we decided. If you can take part of the cash that you thought you were going to put it into a house and save that and put it back into investments and do a Heckum loan, how much are you really costing yourself by doing that Heckum loan if you're getting 7 to 10% back in your investments? And that's what people have to think about it. And I know in the villages, we used to be, when I moved here, we were 75% cash. Then we got to be 50% cash. And now we're back to 75% cash because of low inventory. But people were doing a lot of mortgages because interest was cheap, money was cheap, and they didn't want to take their money out of wherever they had it and tie it up into a house. That, yes, you're gaining investments, inflation is working, but it's the thing, if you're getting 7 to 10%, where's your money best spent? So thanks to the Life Copilot group for that quote. And this is my information. I'll be glad to talk to anybody about it. Donald and Heather know, don't workplace chat or email me. I hate it because I can't keep up. I'm busy here. Best way to catch up with me is to call or text me, or even Facebook if you happen to do Messenger, because I do see that occasionally. So what questions can we answer now?
One of the things I also want to let people know is if you ever come across a question or an issue with Heckum loans or in this area, Debbie's a great person to reach out to and to talk to. She has been through all of it. So you always want to surround yourself with people that know what they're talking about. And she's a great wealth of knowledge for us. So I want to thank you, Debbie, for teaching us about what you do.
Thank you. Yeah, it's a thing that most realtors in my market have no clue about a Heckum mortgage, because if you have somebody walk up and say they want to pay cash, what do we all think? Oh, we can close in 2 weeks, 3 weeks, because it's cash. Why would I want to encourage them to do a mortgage? But guess what? I get paid off of what they buy. So if they're buying a 300 versus a 200,000 or a 400 versus 300, guess what? Can I wait a couple more weeks to end up getting a higher commission and help them actually make the right investment? So I brought this chart back up because this is normally where we get a lot of discussion. But what questions do we have, or what? Open your mic and just ask away. What do we have?
Well, Oh, I'm sorry. Go on. Whoever was about to say.
I'll say
Roger.
300, the lowest amount.
I can't hear you.
Is 300 the lowest amount they'll do?
No, no, I just use that for a figure, but no, you can pretty much do any amount on a Heckum. Just realize that, at some point it may not be the best investment at that point, and that's where you have to figure out which one's right for you.
So what happens at the end? Say you do a Heckum and you pass away. So your relatives have to sell the house and pay off what's left on the loan, or what?
So it's a regular lien. It's the first in line lien.
Okay.
So it's a thing that, just like anything else, when somebody passes away, they have the option to pay off that loan by somebody in the family taking over the property by paying that loan off, or they could sell it as a regular sale. They do have a year to do it. And I put year in quotes because you have to let the Heckum company know, Mom passed away on this date. We're lining up the realtor, blah, blah, blah. And you have to let them know along the way that you are working on it. So it is a progress. The most frustrating thing to me in my market is, and it's mostly on regular reverse mortgages, the kids just think, well, Mom had a reverse mortgage, there's no equity to be had. And they just let it go back to the mortgage company. That's the worst thing that can happen. And on a Heckum loan, that is absolutely the worst, because you're protected in losing value in that regard. Does that answer your question, Roger?
Yes, because I, like you said, am one of those people that didn't know diddly about the Heckum loan because I thought it was reverse mortgage.
It is a reverse mortgage. We don't like to use that term, and the government doesn't use that term because it's the only one that is insured. So
I didn't know it was good to
a
purchase.
regular,
That's the part I didn't know, that you could use it to purchase.
right. So a reverse mortgage, after you have the house and you decide to do a reverse mortgage, that is not insured, that is not protected. So if your value goes down, you could be on the hook, or the heirs could be on the hook for the difference in value. On a Heckum, it is protected. And that's why I love this loan, that there's really no risk to it. And it's a thing that when the market changes enough, I will be using it myself here. I turned 62 last December, and I'm waiting for the right opportunity to jump in myself.
So Debbie, I have a question. How would we as agents market ourselves with something like this? Like how would we market to people above 62 with a chart like this? And how would we do that when it comes to marketing?
So most of the Heckum loan providers actually have nice flyers that they will do for your listing. So what I have done is, okay, if you did a conventional loan, it would be this much per month. And if you did a whatever loan, it'd be this much. And if you did a Heckum loan, it'd be this much per month. And you put 0 in there and you get a lot of conversation. So most of the Heckum loans specialists do have their own marketing department that will help you do something for your open house or your flyers. It's a thing you could do it on KD Core to advertise half price homes, which is Tim Linger here in Florida's logo. He says halfpricehomes.com. It's a thing that you're buying a house at half price. And like he would tell you, wouldn't you buy a house if you could buy it for $154,000 versus $300? Every day of the week we would, but people don't understand it.
That's a great tagline he's got going on there.
What else can we answer?
This is Greg in Las Vegas. How do you respond to the kids coming back and saying, this is a reverse mortgage, you don't want this?
My biggest way to get them to understand it is to have them on the call with the Heckum specialist explaining it, and also on the phone call that is required to get a Heckum loan, the consultation call. Because once you have somebody that understands the process, and if they have an accountant or a financial person in their family, that's the one you want on that call, because they will understand it. Does that make sense, Greg?
Yes, thank you.
Making a call right now.
Yeah, I mean, this is Donald. I was the biggest procrastinator about this. Debbie will tell you, I didn't like Heckum loans, reverse mortgages, just looking at it from a financial perspective, I just didn't care for it. But when you start thinking about it and start looking at it from an everyday life kind of thing, if you're a married couple, you're always wanting your spouse to make sure that they can live on without you. When the time comes, they're going to lose a Social Security check, perhaps a pension, and all of this finances that they're getting in every month when you're alive. But once you pass, those monies more than likely are gone. Now they're living on their Social Security, maybe their pension if they have a pension, and that's it. So you see a lot of people that if they get involved in this, in a Heckum loan, their finances have shrunk, but they still don't have a mortgage payment. And that was the beauty about it to me, is that it saves the spouse from a lot of headaches trying to figure out, oh, I lost all this income that I no longer have. How am I ever going to pay for my mortgage or my taxes and all these other things? When in this case, you don't have a monthly payment. So yes, you still lost financially, but you're still able to, you should still be able to live on what income you have coming in every month.
So you're saying that you can tie both of the married couples together into it. So if one passes away, the other still gets to keep the house.
Correct. So
Okay.
like Debbie was saying earlier,
Question. I wish I had thought of that one. Thank you, Donald, for bringing it up.
I mean, Debbie had mentioned earlier, you might have a 65-year-old and a 57-year-old or a 47-year-old spouse.
Right. But I thought that was just for qualification. I wasn't thinking like you just did. So that was great.
So there's a qualification part of it. So one of the two has to be 62 and over. Now, the flip side of that is what I was talking about, Roger, is that now you're looking and protecting your spouse from having this financial heartache.
Right.
If you will.
Yeah, my stepfather wants to move to Florida, but he says I don't have enough money to do it. If he could come up with 40% down, he could buy a $300,000 home and live in it forever.
If he's 80 years old and he'd be coming with 118 and change, he'd be there.
Well, if he sells the farm here, he would have that.
Right, exactly. The other thing is we run into this a lot here where a spouse does die, they paid cash or they did a mortgage because they could afford it with both people on the loan. And now one of them passes away and we get that phone call that they need to sell, and you start probing about why they need to sell. Well, I can't afford to keep the house because of the mortgage, because of the big upkeep, the whatever it is. And when you start talking, they really don't want to move back up north, but they think the money that they're going to have in their pocket, that's what they're going to have to do. So if they could sell whatever it is here and come in at one of these figures that I'm showing here
Mhm.
and still be able to stay here, we've now become the hero. And
Correct.
this any market in the United States, because this happens everywhere, not just Florida. You know, we all think we're going to live a long time and then something happens.
Well, what is the funding fee for the HECM loans? Is that like VA 2.5%, 3%? Depending
It's
on,
Yeah, you would have to go to that website, but it's 2% of up to so much value, etc.
okay.
I obviously will not go down that path. That's not my responsibility.
No, you said, I was just asking because it.
Right, right. But it's very similar to the VA funding fee. And I was talking to a lady about 2 weeks ago locally. She wanted to meet up with me, said, I want to buy a manufactured home for 150,000. Well, I had already showed her houses for 170 that she didn't like. And I said, so you're going to buy the 150? And she said, yeah, that'd give me 20,000 to keep in my pocket. And I said, okay, well, how long is that 20,000 going to last you? Because now you're buying a manufactured home that has gray pipes that have to be replaced. The tie downs haven't been updated. The roof probably needs to be fixed, because 150,000 manufactured in the villages is considered the lowest end that we have here. And I keep talking to her about the Heckum. Well, I got it out of her. We're having a major problem with the upfront fees. And I said, okay, let's put it this way. In the end, as a single person, she's not married. As a single person, what's going to happen? She said, well, I hope I leave something for my kids. And I said, but you have 170,000 to work with. So what are we going to buy for 170? And she couldn't get it through her head. And I said, in the end, are you going to be able to live with one of your kids if you need help? And she said, probably not. And I said, well, where would you end up? And she said, a nursing home. And I said, how long would that 20,000 last at a nursing home? And she started seeing my point. And I said, at some point, you're probably going to want to do Medicaid. Is that correct? She said, yes. And I said, so what does it matter if you have a mortgage balance of X versus Y? Because the end, the nursing home is going to get it all anyways. And I finally got her to see the light, because people don't want to think about, what am I going to do next? Or what am I going to do next? And that's the thing that you sometimes have to be brutally honest. And that's one that I went right down the path with, which I normally wouldn't do. But she's a lady that doesn't have a whole lot of support from her family. And so she needs somebody to talk pretty much, finances with her. And that was what I was able to help her understand. What other questions do we have?
Tony Anderson said, what if someone has a reverse mortgage and wants to sell their home?
It's the same thing. You pay off the loan, whatever it is. It's just another lien. So a reverse mortgage, you cannot have any other mortgages in front of it. So it's always primary. And so you're going to sell the house just like you would any other home with a lien.
I have a quick question. I'm in California and there's a whole bunch of manufactured homes which probably wouldn't even work on a HECM, because a lot of them are on leased land. So leased land is not necessarily included in the HECM loan, right? They'd have to pay that separately.
Yeah, I don't think they allow you to do a HECM on a leased land product.
That's what I probably guessed, but okay.
Yeah, I think you have to own the land and the home, not just the home. In that case, it's back to what I said. I really don't encourage people here, and every area is different, but here I don't encourage it because our value is the land when it comes down to the $150,000 manufactured home built in the 80s. So it's, unless somebody's really done a lot of renovation, but then it's not 150,000. So.
Okay, yeah, I'm not all that familiar. I don't think I've ever sold a manufactured home, but I've seen them and I've seen some outrageous leases, like 1,500 just for the land.
Yeah,
In Malibu, the leases for the land in the colony are outrageous. It's like $5,000.
Well, even here, like I saw them in Long Beach and Seal Beach and these communities where, yes, we're beachfront, but that's ridiculous for just for the lease.
Tara did ask, in terms of appraisal, will the standards be the same as FHA essentially?
FHA, VA, it's along the lines of that. So, you can't have in Florida, you can't have a roof that has 2 years of life left. You have to have air conditioner, et cetera, in Florida. Whatever your standards are on that VA side of things is pretty much the standards that they meet on the appraisal. And the second appraisal is there's some magical, I'll call it equation that automatically forces that second appraisal. And I don't understand it and I don't need to understand it, but it's a thing, it is a possibility.
Anybody else have any questions? All right. Well, we're about we are at 5 p.m. West Coast time, which I know it's pretty late for you guys on the East Coast. One last question from Tony and Cindy in Colorado. Is it true that in a reverse mortgage where the equity has all been spent, the owner can still stay in the property as long as insurance and taxes are paid?
I'm not talking regular reverse after the fact, but a Heckum, absolutely. You can be upside down on a Heckum loan at the moment, and you can still live in that home for another 20 years. And it only matters at the end, not what it is today.
Tony, did that answer your question? Oh, Crystal says this has been great info. Thank you, everybody. And Tony and Cindy. Tony, Cindy, where are you guys in Colorado? Okay, we'll see when they pop up.
Yeah, I realize reverse mortgages, not all are created equal. There are many different types of reverse mortgages.
Right, this is Tony. We're in Littleton, just south of Denver.
Okay, my parents live in Telluride for the last 20 plus years. Before it was, I love Colorado.
Yeah, I sold a house in Telluride. It was about 1,600 square feet, 3-bed, 2-bath, no garage, needed a lot of work. It sold for $980,000.
Yeah.
Because it was in the town of Telluride.
Yes.
But I took a course in reverse mortgages, and just really quick, that was one element that I remember. They said that it used to be that, if you had $400,000 equity, you could disperse that however you wanted to, draw it out over a long period of time. But once you ran out of that equity in a reverse mortgage, which I think is one and the same as the Heckum loan.
No, it's not the same.
It's not the same. Okay.
No, absolutely different.
Because the Heckum loan, I mean, what I'm talking about is where somebody has equity in their home, a ton of equity.
Right.
They might have $100,000 home equity line of credit or something, and they pay that off, because you always pay off the existing loan when you do a reverse mortgage. And then, but then when the money's all gone, let's say the person's now, several years later, and they've depleted all that equity in that reverse mortgage. My understanding is that as long as they pay for upkeep in the house, pay their taxes and pay insurance, they're not forced to leave their home.
That's still correct on the reverse mortgage after purchase. That
Uh-huh.
is very true. But like I said at the beginning, that's a totally different animal and those are not protected. So if we had a crash and now their house is only worth Y instead of X, they're not protected and there could be recourse on coming after that money after the fact. Heckums do not have that recourse. The one thing I didn't mention on this chart, it does not stop at 700,000. You can buy a $3 million property with a Heckum loan if you want to. There's all kinds of formulas that have to happen, and that's beyond the scope of what I wanted to share tonight. So
Well,
if
thank
you're
you
in
so
a
much.
if you're in a very expensive place and your average is 2 million, it doesn't stop you from doing a Heckum loan. They're out there.
Right. Yeah, we have a listing coming up in Wash Park, and it's about $1 million property. It's just a little bungalow, but in Wash Park, if you're familiar with that area of Colorado, it's really pricey. And so she has I did an O&E from the title company, and it shows that there's a Heckum or a home equity. It's a Heckum loan. I forgot what it stands for. Home equity. It's a conversion or something like that loan, but it looks like it's $1 million, but I don't know if that's just what's available for her. I'm going to talk to her to see, did she pull all that $1 million out, or did she just pull partial?
Well, but no, a Heckum loan, you're not pulling out. A Heckum loan is up front. A Heckum is never after the fact. A Heckum is strictly up front. So
Okay.
the best way to figure out a Heckum loan is always going to get a monthly statement sent to the primary residence. And my lady that was getting a divorce, she had a fit because she'd open the statement every month and say, well, my balance is going up. And I said, did you make a payment last month? No. I said, then it's going up. Don't look at the balance. Stick it in the drawer. Don't worry about it. But they send a statement every month because they want to make sure that you're actually living in that house. So the best way to figure out what's happening, have them show you their last statement from the Heckum loan. And then you can see what balance we're working with. Doesn't matter because even if they owe more than it's worth, they could still do a regular sale and it won't affect their credit. So you want to do it.
Got it. This one, looking at the deed, it says adjustable rate home equity conversion second deed of trust.
Right, that's going to be a Heckum. So, and there are adjustable rates. It's that whole what's good for the person that they're talking to if you do adjustable versus fixed. So there's all kinds of parameters, but just have her show you her last statement or give you, access to be able to see that information. And like I said, she's upside down. You think it's $1 million and she owes $1.5 million, still yet do it because she's not going to lose and she won't have any credit problems. Don't try to do it as a short sale because it's not a short sale. It's a Heckum sale.
It says borrow shall pay when due the principal of $1,148,400.
Yep.
And so, yeah, so that's, but I'll have to ask her, but I don't know if she actually took out that amount up front.
But a Heckum loan, you take out the maximum at the beginning. So in my examples here, 52% is the maximum that you can do when you're 62, based on whatever price range. So a Heckum, you're never taking anything out after the fact. So it's the thing that, yes, all you need to find out is what's your current balance.
I got you. All right. I didn't mean to take up so much of your time, but thank you.
You're welcome. I think that should pretty much wrap it up for us.
Yeah. Debbie, thank you so much for joining us and everybody else that's on this live Zoom call. We are going to be doing LinkedIn next week and working on our LinkedIn profiles and how to make them pop in the senior sector. Anybody else have anything to add? Debbie, thank you for
You're
everything.
very welcome. You're very welcome.
And
Right.
for anybody that's wondering, nobody ever really sees Debbie. She's kind of behind the scenes in our group, but Debbie and Donald are the ones who started our group. And then I got very lucky to have gotten introduced to them and now be a part of this group. And so I thank you myself for starting this group because it's been fun. It's been
And
a lot of
do some more TikTok stuff.
I got a really good one coming out about numbers. So we've got some alarming stuff, but I don't know if you guys saw, I posted a news article from the LA Times today about seniors being on social media. So if you guys aren't on social media, then you guys should be plugging away at social media for it.
Sounds good. Thanks. Thank you, everyone. Thank you for your time. Thanks.
Bye.
Thank you. Great session.
Thanks.
Great information.
Thank you, everyone.